Good morning, traders. It's 8:02 a.m. Chicago time on Friday, the 8th of March, 2024. This is episode number 2633. I want to remind you that derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's make this a quick one here. The Convergent Trading Pre-Market Summary Sheet this morning shows really mixed sentiment all around. The Russell is popping higher. The S&P and the Nasdaq are up. The main news, of course, today was the U.S. non-farm payrolls. The NFP came in at 275,000 versus 200,000 expected. The unemployment rate ticked up from 3.7% to 3.9%, so it's a mixed bag. Average hourly earnings month on month were expected to jump to 0.3 or to be at 0.3. It came in at 0.1. Hourly earnings year on year came in at 4.3% versus 4.4%. Non-farm payrolls in private beat quite a bit at 223,000 versus 160,000 expected. So relatively strong number this morning, but the reaction from the market was quite mixed. That's really the biggest news. We did get, a few numbers in the overnight session. The German PPI came in at 0.2% in line. PPI year on year, negative 4.4%. A little bit stronger than the negative 6.6% expected, and the unemployment rate in Canada was reported at the same time as the U.S. Came in at 5.8% in line. What's left for today is the crop report, and I wrote there crop report from Mr. Beeks, for those of you who know what that refers to. The WASDE report today at 12. We get the Baker Hughes rig count at 1 p.m. And then this evening we get the important inflation rate out of China. We get the inflation rate plus PPI this evening. The S&P is in a multi-distribution, looks almost balanced, but when you look at the price action is clearly in an active discovery mode. The inventory is 79% long, and the range is 37.5 points. 37.5 points. Again, we're coming in with a range that's relatively wide. So that's where we stand. ETH has pushed through 4,000. A lot of strength there. Crypto getting a lot of attention and news coverage. And then the dollars hovering around 102.5. So it's a little bit soft today. So what do we have in terms of structure here? Let's review what has happened real quick just to get an alignment. I have not been monitoring the markets as I was traveling yesterday, traveling back to Chicago. And what we've done is we established this really important balance, this really important balance right here. We tried to shift that down. It was rejected at 67, 50, 67. We bounced from there. Very telling day. This is kind of like a swing long type of day here. Indication. We end up with a pretty strong push into 51.50. We test above 51.50 and end up coming back and closing well below it, an indication that there was zero interest or very little interest above the 51.50. We gap down. Open, try to fill the gap. This is the day where we're only focused on short opportunities. If you remember, if you were here, this was Tuesdays. Yeah, I believe it was Tuesdays. Trader Bite, I said, I'm just looking for any attempt to push higher to be sold. We ended up selling. We ended up leaving single prints behind, extending through the 67, leaving a double TPO bottom, but finishing close to the middle of this day out of this big balance zone, and then the next morning we open right up against the prior open, and then check the single prints all the way down. So we fill in the single print zone right here, and then start rotating and extending up. So we end up pushing to almost fill the gap zone that was left behind right here. And then the next day we open right on top of the point of control that we left behind last on Monday. Open right on it, come back down. We tested the prior high, which was 34.50, down to 33 and a quarter, and then it left a tail behind, range extension up, and really shifted the balance from here. So balance has shifted from there to there to there, and then now it's trying to shift the balance up here, and we are opening above yesterday's high, currently just slightly. Yesterday's high 51.70.50, currently at 72.50. Our settlement price 61.75, and this is relatively balanced yesterday. Yes, it is skewed to the upside, but it's relatively balanced. Now, let's not lose sight of where we are. Look at where we are. We are not giving up. This is RTH only, daily bars of the S&P. And you could see from the structure, I've shown you this profile quite a bit since the gap from last November when this rally kind of started taking off. You could see quite active price discovery, right? There's no balance here. So the market condition is buying imbalance. And it continues despite the fact that it pulls back. The overall long-term market condition is buying imbalance. We have basically a channel going here, and we are not giving up any space on those highs. Like, we're just not allowing the market to breathe away from the highs. So everything is just everything consists of dip buying right now, and the profiles are just simply tracking where the market had some agreement and what areas are likely to be retested, like we saw here yesterday. So just a reminder again, on your charts, you really should be marking this low here. Any drop is likely to check this low. This low is poorly auctioned right now. But that's really it. I mean, this is going to be a short one because there's not much to tell you here other than the fact that when markets are like this, volatility drops, volume generally drops. We've had some pretty decent volume lately with these news events, but volume generally drops, volatility drops, range drops, and it gets harder to trade. And so this is the kind of market where we move to a product that's thinner. By contrast, the NQ has this big balance zone right here, and it did break above it and pushed higher and established a little bit of balance here. We extended this balance yesterday, but look at what it's doing. It's putting in a lower high. It's got a lot of drag on it. If we look at the performance of some of the big issues in the NASDAQ, you could see that, Google over the last month, this is performance on a percentage basis over the last month. Google down 7%, Apple down 9%, Nvidia up 33%. But overall, it's just, it's got quite a bit to contend with. Tesla from 3 months ago down 25%, Apple down 13%. Like, these big names have just been a drag on the NASDAQ. They have a much higher impact on the NASDAQ, which only has 100 stocks versus the S&P's more broad 500, 502 stocks, because some of these stocks are duplicates, like Hewlett Packards and Google's. Um, so there is some drag here on the Nasdaq, but the same structures apply. The same rules for the auction apply. We've moved away from the big balance down here. You can see we're establishing balance up here, and we are trading inside of the range currently, inside of yesterday's range versus the S&P, which is trading a little bit higher. So the Nasdaq to me looks like it's struggling to push and hold these highs, and it could very easily snap back into that 18050 and 18020 area. Not saying it's going to do that today, but the rally in the Nasdaq is suspect currently. Okay, crude, we still struggle with the 80. So we managed to push through the 80. Now we've had a lot of experience with crude coming right up to the 80 and falling right off, going way back. And what we've done is we've had some excursions into the 80s, but when you get a day like this, so I just want to give you a little hint here. When you get days like this in crude, where we open, so we're one time framing down, you can see that lower high. So this day establishes the one time framing, and then that gets broken because we open at the upper end of a balanced day with a weak low, and we open and we test up. But on the test up, we end up coming back and closing like this. This is a very high probability of the next day coming in and having me say, I'm looking for selling, I'm looking for selling, I'm looking for selling, I'm looking for selling. So I'm going to be fading moves higher. If you can detect these, if you can detect this sort of auction, if an auction opens at the bottom, so we get a little, for me on Edge Pro X, it's a little green triangle. If it opens at the bottom, and it just pushes up in what is a drive. So this was a drive at some point early in the day, pushes up, and you have range extension up, and then somehow we end up with the close at the open or worse below it. Then there's a very high probability that price discovery is complete to the upside. This right now, the crude oil, since the gap higher, crude oil is back right in its balance point, right at 78.50, where that point of control is. It's trading right on top of the point of control. It put in, so we had a rally up, pullback, failed retest, and crude is now very likely to push through the 76 low that we put in here. Very likely. But you have to take it day by day. You cannot trade your prediction. You have to trade what the market tells you. So you're looking for setups to the short side. What does a setup to the short side look like? It can look like a lot of things. It could look like a fib pullback. It could look like moving averages. It could look like whatever you want to choose. I personally just use price action with order flow to detect the actual triggers, but that's not all that important to me, the actual setup. What's important to me is to read and understand what the auction has done, and that's what I'm sharing with you here. So we're establishing one time framing down again, and I'm expecting crude to fall below 76 over the next day, 2, 3, 4 week. I'm not sure, but right now crude is in balance. It's opening in balance. It's been pretty much sideways. It did test higher overnight, and it's near the low. It does have the same overnight stat, basically 97%, 98% historical probability of tagging the overnight high or touching the overnight high or low. It looks like the overnight low is much closer. We'll see, but crude is back in balance. Okay. An interesting one is gold. Look at this thing. This thing is ripping. And if you look at gold on the short-term chart, I'm using a 1 tick by 5, which in general gives me not so many bars, but gold has been trading for an hour, and it's an hour in a couple of minutes now. It opens at 7:20 Central, and it trades. It basically opens with the Treasury market, Treasury futures. All of a sudden, 1 tick by 5 is giving me too many bars. This tells me there's quite a bit of volatility. So guess what? Gold has my attention today. There's quite a bit here. There's some really good structures, in my opinion. Again, trading futures is not suitable for everyone, but I see quite a bit in terms of structure, market moving, zippering, failing, retesting, that sort of stuff. Gold has been pretty decent. Of course, the recommendation if you are going to trade gold is to trade the micro gold contract. Okay, keep it small until you've figured it out. So that's the rundown. What's expected for today? What are we looking for today? Honestly, it's really hard for me to see what this might do. This does have a weakish high. I'm looking for this to pull back, base, poke through the high, and then come back and really go sideways and establish further balance with yesterday's point of control area. That's what I'm looking for in gold. I'm not looking for not gold, the S&P. I'm not looking for the S&P to push and continue higher. I'm looking for it to test higher if it does, but ultimately I'm looking for it to kind of sit and digest the fact that it's above 5150. So it's likely to trade in a range here down to 5150. I'm not too, despite the fact that the overnight range has been pretty good, and that's an indication of pretty decent opportunity coming into the day session sometimes. But today, with the non-farm payrolls behind us and it being Friday on a relatively news-filled week, I expect today to be a rest day on new all-time highs. Capiche? All right. I'd love to have your feedback. Let me know if I'm not explaining things enough or if it's too much detail for you. Happy to make adjustments to accommodate the voices of the listeners, of course. And of course, hit the subscribe button if you're not a subscriber to the channel. You just have to go to ft71.com /YouTube, and it'll automatically send you to the subscribe button, or hit the like button for this video. Good luck, and I'll catch you on Monday morning. Very glad to be back in Chicago, and I am not traveling for the next 2-3 months. Man, I exhausted myself over the last month and a half. It's been pretty intense. Good luck. I'll catch you Monday. Bye.